All right. I believe we are live. You never know these days with StreamYard and its delays and everything like that. But glad to be here. Happy Monday. Hope everybody's continuing to have an excellent time in the markets. It's a beautiful day here in Houston, Texas. Let me just double check that I turned on everything. We might be having a special guest joining us. We may not. You never know these days, you know? Send link to email. He's like a child. He's like a child. You gotta do what the man wants. But yes, we will get this gentleman set up. You'll know exactly who it is, and luckily for us, we have the opportunity to have him on. He is an esteemed writer. That's all I'll say. Hopefully, we get the opportunity to get him on. But in the meantime, let me get it mailed over to him so he has the opportunity to come on. Let me email from the right address so he doesn't wonder who the hell is sending him random links. There we go. Mistype. What is it? 6/16/2025. Believe it or not, ladies and gentlemen. Can you believe that? It is hard to believe that it is June. Markets are doing relatively well considering the circumstances, everything that's going on in the Middle East right now. I won't speak on a geopolitical sense because that stuff is way over my head. But what I will talk about is a little bit about what's going on with Manny Moolah, what it's looking like in the portfolio these days, and of course, just jumping around from ticker symbol to ticker symbol, being surprised. So year to date, we are up 2.24%. Overall, the past year, we're up about 11%. What else is there? I'm curious. My triple leverage NASDAQ, one of the ones that I always kind of look after, down 6%, but still relatively flat over the past year. Okay, there's that. One that I want to talk about a little bit today, and hopefully Steve can get a little bit more context into, is this bad boy. I initiated a position this morning into Oscar Health, and just so by happenstance, in the case of luck, had the opportunity to get a pretty decent gain today. So there's that. Was not planned. I was really hoping that the price would stay where it was last week. If you guys look, the price last week was in the $13 range. It had taken a slight pullback. And I was really hoping to buy it in the 13s, but here we are. So as of that point, we're doing rather well. Up about 16-17% on the day. So there's that. And I also, over the weekend, initiated another position again. So back into SoFi. Luckily for me, it was another good returning day in SoFi. You can see we're up 5%. What I'm going to do with this one is this is going to be a slow and steady wins the race. I threw $1,000 at it, and every couple weeks I'll just throw another $100 at it. I like SoFi, as much crap as I give them in terms of they're not a tech play. They're losing their lunch to our friends over at Robinhood and things of the like. I still think it's a great opportunity and a great place to put money. The thing that I think most people have yet to realize with SoFi is they've just gotten to profitability. And so the thing that's going to show up initially is people are going to be like, oh, the price to earnings is extremely high. Yes, agreed. Right now, price to earnings extremely high. Their ops margins and net margins not so great, or not so much the ops margins, but the net margins not so great. Yes, I agree, because they just hit profitability. So it's one of those things where you're going to see revenue growing at a top line matter, but likely because of the fact that now they're coming from such a slow bottom base of single digit earnings per share quarter over quarter next year, I wouldn't be surprised if you see 40-50%, maybe even more EPS growth in 2016 plus. And so I'd sold out of SoFi when it spiked up earlier this year, and I utilized some of that money to buy into Nubank, which unfortunately hasn't really done too much. But I'm trying to remember when I sold SoFi, but it was in this range. So I should have initiated more of a position back here, but I was buying other things, and those other things, fortunately, have made me a decent amount of change as well. So it's not for nothing in terms of what I did with the capital. At one point, SoFi actually did make it into the top five as my, I think, fifth largest position. And so, I made decent money on it. I initiated my position in February of 2024. So it was hanging out in the $7, $8 range, rode that up to 15, $16. I said, it's happening a little quick, so I don't think you could blame me. And so I took that opportunity to kind of trim within the last 6 months or so, and it's been hanging out kind of flat. So, I'm not a trader by any means. I don't like to trade stocks. It's just unfortunately, SoFi, it was a good opportunity to take 100% gains off the table and, put that into other things that I also like as well. So, that one was that. And I don't think SoFi is a bad company. And if I were to add another position, SoFi would be in it. It's in my Thanos ETF. For those of you that have been watching the stock Olympics or stock draft, or God knows what we're calling it these days, you'll see that SoFi is in there as well, along with Oscar, along with several other companies in there. A couple companies that I wish that were in the stock draft that unfortunately were not able to make it was Venture Global. So that was an oversight, I think, by the creator of the stock draft, as well as Next Decade. Venture Global, I wouldn't be surprised if over the next year or so it gets back to the $20-$25 range, but I don't think it's going to go much more than that. But even still, from where we are today with Venture Global, we've been able to pick up a decent amount of shares here and really get ourselves up a pretty good amount. So yes, I did buy the IPO. I that's full transparency there. $24 or so is what my first initial shares were at. Me and many others, specifically people that talk to me very regularly, added very heavily in this $8-9 range, and many others in the $10-11 range on both sides of this kind of trough here. And hopefully, if you were doing that, you were able to come out alive. Whether or not you want to hold on to the stock, I think it's an opportunity for the company. You can see on Robinhood specifically, I'm about 50-odd%, but I have shares in Fidelity as well. That makes this almost a six-figure position, not quite a six-figure position, but it does squeak it into the top 5 in my portfolio. Might be number 6. Depends on the day. It switches back and forth between Next Decade and this company. So, anyway, I think this is a good opportunity to potentially buy something that within the next 5-10 years will be worth $100 billion. Currently, the company is worth $40 billion, if I remember correctly. $42 billion. So, I think you'll be able to double the stock price here, and then if you do have the opportunity to do some buybacks, of course, you'll see that incrementally as well. Bitcoin back up on a run, so we're hitting this. If you look at the last year chart, this is where Robinhood's also once again where I store a little bit of my Bitcoin, but this is the last year chart. You're trying to hit this peak again here in the portfolio, for Bitcoin. Whether or not we break through this, I am slightly confident, and to iterate again, I don't know if I've had the conversation with folks since the draft on, when was that, Thursday, Friday. I don't know if I had the conversation. I think that Bitcoin and crypto will be bullish in the coming 6 months or so. But I think that we'll start to enter a crypto winter once it kind of gets to the beginning of 2026 into the middle of 2026. And so that's why I personally stayed away from things like MicroStrategy, like dumbass Stephen. I'm just saying that because he just entered the background. No, but like staying away from MicroStrategy and many of the other crypto plays, because I just think by that point we'll be hitting a retracement. But anyway, bad joke. Stephen's one of the most intelligent people I know. And speaking of, Mr. Stephen Furillo. How are you doing, sir?
Doing all right.
It's all right. Not great, not grand.
Well, I don't have a level 60 character on an anniversary server rating. So
I mean, Steven's upset with me, guys. He's upset because he gave me 500 gold on Cata Classic server on WoW. And he's upset, firstly, that he's too busy writing 18 articles a day to be able to play with me. And then two, I've been playing on Classic, and Steven hates me and he doesn't want to level a character. So, Steven, did I miss anything there?
no, you got pretty much on point. Blizzard should just let me buy a 60 from them because I don't have the time to level. They should have a thing where if you don't have time to level because you're working, you should be able to buy a max level character.
See? Stephen Furillo, I have you on for a very specific reason. You are a well-esteemed author on Seeking Alpha. And
let's not go that far.
I view you in high esteem as an author on Seeking Alpha. Stephen writes several articles at a minimum 4 a week, but sometimes can be up to 5 or 6, depending on his coffee/tea intake. Although I don't think you're drinking coffee anymore, are you?
No, I haven't drank coffee in 8 months.
Oh, Jesus, he's a monster. This is purebred American steel, is what I'm trying to say with Stephen Furillo. Can just wake up and be excellent and write massive amounts of articles. He's like a machine. Sometimes I do wonder, it's the milk. Everyone's thinking it's the milk, Stephen. Anyway, I'm very curious. I put this into my stock draft portfolio. You done some research on it. I initiated a position today. Chris Patel hates it. What else can you say?
In all fairness, I don't know if Chris has had the time to really look into it.
I know. I'm just giving him credit.
So, look, let's get the elephant out of the room. The biggest risk to them is the ACA. So, other than the expanded access to individual health plans through the states, through the ACA, there is no factors that I can see that would make me bearish. Like, that's the big negative. If something happens with legislation, Oscar's business model could get severely impacted. I can't predict the future. I don't know if that's going to happen or not. But when I go through the numbers, this is really interesting. Look, I understand insurance. Like I do, I'm an insurance person, get it. And this chart is very bullish to me because this shows the quarterly revenue generated by their premiums and annuities and what they're paying out of the policy benefits. And the policy benefits is very important because that's the total of the claims and medical care that they're providing. And the gap continues to widen. And that's good. I put the exact numbers somewhere in the article, but it was something like they are, I don't know, oh, here it is. Their margins are improving as their policy benefit to premium revenue was 88.8% in Q3 2022, and it's now 75.43%. So they are taking in significantly more premium than is getting paid out. And when I look at the balance sheet, they have on their liabilities 1.47 billion in unpaid claims that they've accrued for. And they have 300 million in long-term debt. But in cash and cash equivalents, they have 2.3 billion. And in total investments, they have another 2.6 billion. So they have something like 1.4 or 1.5 billion dollars in liquidity after their unpaid claims. Very low debt. Their members continue to grow. They have 2/3 of the market cap in cash on the balance sheet. It's very interesting. I'm looking at this as a very speculative play that could mimic what Robinhood did with finance. Like this could be the Robinhood of insurance
How?
because they're going tech first to provide a better solution for individuals with healthcare. The kind of the same way that Robinhood offered a tech first stack, made everything easier than,
Mhm.
and basically they built a better mousetrap. Like to me, it wasn't hard using Fidelity or one of those accounts to buy stuff, but people just happen to like Robinhood because it's easier. Kind of the same thing with Oscar. It's
So the
really
us-
the same business model.
so the user interface makes it slightly simpler to be, and it's no frills, no scams, what you see, what you get sort of model. And so from that perspective, people feel comfortable signing up with an Oscar. Is that what you're saying?
I mean, it's what it seems like. Now, when I look at the analyst community, and granted, there's not many analysts that are covering this, but look at that EPS growth. They're trading at 20 times this year's earnings. Their EPS, they just became profitable. Their free cash flow is huge. So their free cash flow, they're doing, forget how much, something like 800 million right now.
Yeah.
Hold on. But
What?
on an EPS level, they are expanding 6x this year and another 74% next year. That could be huge catalyst drivers. And if we look at their actual free cash flow, I mean, look at that. In the TTM, basically 1.2 billion in free cash flow. That's
Yep.
huge. And they just initiated their first buybacks.
And this is a what size company, Stephen?
3 billion market cap.
So in that respect, it was like it's kind of they're just kind of hitting their stride. And to me, the reason why
Look
I
at the
thought it was an
revenue growth. Look at the revenue growth last year. That's like 65, 70%.
yeah. And then another, I think they're projected, what is it, another 30 or so percent this year, 20%,
Yeah, something
30%.
like that.
So
It's just wild.
and to be fair, from what I understand, their full year guidance had them at an 80, 81% premium payout, right? So obviously they're taking in 11, 12 billion, and they're thinking that 80% of that, or at least that's what they guided for, 81, 82% of that was going to go out to pay out, say, claims, right? But at the moment, from what it looks like, they're running in like the mid 70s. So they're obviously being able to capture a lot more of that premium from the first quarter, whether or not that persists. But basically, those numbers that you were kind of sharing with respect to EPS and ops cash, etc., was, I think, assuming sort of like an 80 something percent ratio for the year. And so if they end up with a 75% ratio, that's a huge amount of money to the bottom line on an already very depressed market cap, in my thoughts. And so it's like almost the way I was looking at this, and this is the way I kind of framed it. Even if you were to say that the Trump care or whatever sort of healthcare system were to come out and say disrupt the ACA marketplace, the Affordable Care Act marketplace that was put in place by Barack Obama, and is really what this company has been leveraging off of. Even still, I believe that there's other things that the administration should probably be worried about. And then two, as we've kind of seen today with more focus on Medicare, et cetera, the stock is up, 18% today, 17 or so percent today, 13% since when I bought it, earlier this morning. And with that, I think it might be a good opportunity. I think to me, the most you could lose is 100%, right? And
Right.
that's kind of the way I'm looking at it. The most you can lose is 100%, or even if it goes down 50%, you lose 50%. The upside opportunity on this is multiple hundreds of percent. And
I don't
so,
understand why people are saying sounds like lemonade or that I need to look into lemonade. Like I looked into lemonade, their numbers are not good.
no, I don't know anything about lemonade. So if you could spread any light on that, then
I mean, let's look at this together. You tell me. You just saw the numbers for Oscar. Look at the revenue numbers for lemonade. Minimal growth, $500 million in total revenue. It's a fraction of what Oscar is doing. Operating income negative, net income negative. They lose money. They've never made money. Negative EPS, Free cash flow, negative. So you're talking about a company that has negative free cash flow versus a company that has 1.2 billion free cash flow. Balance sheet, they have 676 million in total investments with another 300 million in cash. So call it a billion in liquidity there. And under the liabilities, I don't insurance and annuity liabilities and unearned premiums is roughly their cash liquidity position. They're two completely different sets of financials. One is much more superior than the other.
Yeah.
I mean, I'm not
Definitely
seeing
not.
anything about Lemonade that's interesting.
And what's the market cap of Lemonade?
Roughly the same thing, 2.97.
Yeah. I mean, that's, to me, that's kind of a no-brainer if you were to compare the two. I see Oscar as a Lemonade. Well, I'd be curious to see as people kind of just briefly look at the numbers. I mean, I know the numbers aren't everything, but if you just what you showed with respect to the revenue growth, it didn't look very appetizing to me. I mean, it's not like it to me, based off what I'm seeing, uh, and I haven't dug too much into the numbers, but you're talking about a profitable company at 3.5 billion. You're talking about an unprofitable company with what, less than a tenth of the incoming premiums on an annual basis. So to me, just in that respect, it's kind of like, all right, so you have a long way to go, unless they have some sort of massive underwriting system that allows them to generate 50% more than what they pay out.
And look, Oscar's membership reached 2 million in Q1, 41% year over year increase. So you're seeing a huge spike in people utilizing their services. If their tech stack really is as good as what it looks like, and if they really start gaining momentum, this company could do very well over the next couple of years.
Mm-hmm. That'll be interesting. It really will be, because I think in several years down the road, you're looking at 15 to 20 billion dollars in revenue. They're going to have at least 11 to 12 billion this year. So just 1 or 2 years down the road, I wouldn't be surprised if they're starting to look at 20 billion. Their net income goal is about 5%, and that was like with mid 80s% payout ratios in terms of the premiums. So if they're able to get that 70, 75%, I mean, you're talking about net income ratios of, or percentages of a decent amount of money. I mean, at that point, 5% of 20 odd billion is a billion on its own. What kind of premium are you going to put on that? 15, 20%? So, or sorry, not 15, 20%, 15, 20 times. We're talking about a company that could honestly be worth, and the way that I look at it, if you were to remove it and you were to say this isn't affiliated with the Affordable Care Act, to me, this is a $10 billion company, no problem.
How about
But
this? It's trading at 7 times forward earnings. Now, think about that. With the amount of growth that Oscar has, it's trading at 7 times 2027 earnings. I'm seriously thinking about starting a position in it. The numbers are very interesting.
the thing I just don't understand is that I feel like it's one of those things where what is it like? I'm trying to remember like a comparable sort of thing recently that was just like something has to be wrong, right? Something has to be a huge risk, and like, is that biggest risk really just the fact that it's associated with the ACA market?
Well, it's a big risk. I mean, look, we don't know what's going to be in the upcoming legislation bills.
As of today, it looks like we're on the right side of those legislation bills. I think what just came out, which is what the big catalyst for today was the recent bill. I think just passed the Senate, the big beautiful bill or whatever it was, just passed the Senate, and that's why all solar stocks are down after hours, and companies like this are seeing kind of tailwinds. I think it had less stringent impact on Medicare than people were expecting, and so I think that's a second revenue stream that Oscar is really trying to go after, is the Medicare side of things, not Medicaid, Medicare, so the elderly. But I think that this is something that, to me, as we continue to have more and more issues with other healthcare systems, I think other people were talking about UNH and the problems with that, CEOs getting killed. It's obvious that healthcare insurance within the United States is a very divisive topic, and obviously not the easiest thing to wrap your head around. I don't think that this is necessarily a bad opportunity. And say you even get a 50% to 100%. This is the way I look at it. If nothing changes and you still have this depressed valuation, at a minimum, you're still going to grow based off the fact that you're going to have, EPS growth, revenue growth, etc. So even if it remains at a huge discount comparatively where it should be, even if it stays at that 7 times price to earnings ratio, the earnings are going to explode. They're going to continue to explode, and they're going to come from a very low base because of the fact that they just hit profitability in the last quarter of 2024, and they're growing like a weed. So in that respect, while you have 30% revenue growth, 25-30% revenue growth for the fiscal year 25 comparatively to the fiscal year 24, you're going to have more than that on the EPS growth due to the fact that, as you've already shown, they're coming from a low base, 600% growth. And so if they persist, 75% growth next year, etc., you can assume even at this depressed pricing of 7x price to earnings, that if they grow 75%, that you're going to hopefully see a pretty good premium, or not premium, pretty big growth trajectory going into 27, 28, 29. So I don't know. To me, it seems like, yes, there's risk, but if you can get over the fact of the downside risk and say the upside opportunity is X, then I feel like you could sit in a good position.
What I don't understand is why you're not streaming Classic.
So
I think that's what people want to say.
Steve is convinced that people would like to watch me play World of Warcraft. Steve is also upset that I've been playing more World of Warcraft than I have been writing articles.
I am. You can do both.
He says I can do both. I am on the opposite side of that. So I don't know. You guys would have to let me know. Would you watch me play video games? And I've done it before in the past where I've streamed playing video games while answering finance and stuff like that. But
I feel like we should just start our own community in WoW.
Our own community in WoW? Is that what you said? We should start our own channel called Stevie Streams During the Day.
No, because I don't stream during the day.
That's true.
I feel like that we should start our own,
We should get prepared so when GTA 6 comes out, we could take off of work somehow. Whether that's vacation or... But I think, Steve, to get this started, I think you should take off vacation next week. Then you can stream during the day. Like all these professional YouTubers and Twitch players.
I wish I could. I can't.
You got important meetings to attend to?
Yes. But I do think that Oscar can do things. I think it's cheap. And look, if the analysts are right, this is going to be huge EPS growth. I think it's going to be good.
Can you, and then we'll close the topic on Oscar. Can you read your conclusion to us, or do you think that it's still running, Stephen? We're up 10, 11% after hours.
Sure. So the market may still view Oscar as speculative, but it's turned the corner on profitability and has a strong set of financials. Oscar has been successful at scaling its membership while utilizing its core technology as a differentiator for efficiency and member engagement. Oscar continues to deepen its market presence through new partnerships, and its membership reached 2 million in Q1 while generating $3 billion in revenue. The gap between premiums and annuity revenue compared to policy benefits continues to expand, as policy benefits now represent 75.43% of the revenue generated from these policies. Oscar has a strong balance sheet with 63% of its market cap held in cash and $1.44 billion in investments in cash after accounting for Oscar's liabilities, including unpaid claims and insurance and annuity liabilities. While there are risks associated with potential changes to state-issued programs under the ACA and future regulations, The analyst community anticipates significant future growth for Oscar, and the risk reward balance is very interesting, with the market cap hovering around the 3 billion level.
How how's the sentiment on Seeking Alpha for Oscar?
It's actually, I was surprised how many people read the article.
Read the article. Well, of course, everyone's going to read the Stephen Furillo when he posts an article. But I mean, in terms of the sentiment on the actual stock itself, I mean, what I generally
bullish comments.
What's that, bullish? You think so? What I generally do when I write my articles is I always kind of see what's the street saying, what are the analysts on Seeking Alpha saying, and then what does the quant say? So I'm kind of curious. What does the street say? What do the analysts on Seeking Alpha say? And what does the quant say?
I don't know what the quant says, but the rating summary is Seeking Alpha analysts have a buy, Wall Street hold, quant hold.
Okay. Interesting. I wonder why. Maybe Wall Street is waiting for some sort of
maybe
carpet or something to be rolled out with respect to things that come out of the bills or whatever Trump is kind of working on. I don't know.
Are you rating tonight?
I don't know yet. Should I?
I don't know. I gotta get going though.
But I appreciate you making the impromptu. I did just wanted to hop on, and I'm glad that you had the opportunity.
Are we doing our meeting tonight or not?
I can.
Well,
yeah, I can.
Nobody ever likes to join.
Well, I can. So
right, I'm going to send a text out.
Meeting of the minds. Maybe we can convince Mr. Patel, instead of poo-pooing Oscar, he can maybe do his due diligence. He is a big fan of the UNH rebound play, and I think Oscar might be a good opportunity. I'll be continued to add. I appreciate you coming on, Mr. Fiorillo.
I'll a little later, and maybe we'll play some WoW or something. All
right, my friend. Yeah, Steven's article is in the chat box.
Look, they're asking when will the gaming streams happen. I think we got to do it.
We'll trial it out. I guess the question is do I create a separate channel? Do I do it on this channel? I don't know.
Technically, you can put it on the idea if you're trying to farm gold. Technically, gold is money. It falls in the Map Money channel. So, I mean, I don't think you have to make a separate channel.
I could, yeah, I don't know. I'll think of something, Steven.
All right, I'll call you later.
You're the man. Thanks for coming on.
Better.
All right. Well, I appreciate that. I am really excited that Steven was able to come on. I hadn't really had the opportunity to fully digest his article as of yet, and so I'm probably going to read it once or twice more, maybe listen to it when I'm, just laying down on my back, thinking about the day, reminiscing of how awesome it was and how awesome I am. I often end my days like that, but instead of playing my normal daily affirmations that I've recorded for myself to hit on replay, maybe instead I'll listen to the 10 minutes of Stephen Furillo's article about Oscar Health. Overall, I think it's a great opportunity. I look through the numbers and I'm scratching my head. I'm like, there has to be more risk. Yes, there is big risk associated with the ACA, marketplace changing, etc. But to me, I think that what's the worst that happens, right? You lose your investment, your initial investment. I think the upside still opportunity of this could be multiple bagger, 20x or something like that. I don't think so, right? I mean, maybe, but I could see this. I could see a place where this ends up being, if people can continue to one, get over the dependence on the ACA marketplace, and two, the company can diversify away from it as well and grow separate businesses, then in that respect, I think this is a good opportunity. Let's see. Curious to see. Let's scroll to the top of the hour and see what people have been saying. Appreciate the 170 odd of you on the channel right now, hanging out with me. some of you on X, and I'm not sure how many are on Kick. But for anybody that is interested, I am starting to stream on Kick as well, just like how I've been trying to stream on Twitch as well. So let me just post this. If anybody does like to watch on Kick, please give that an opportunity to go through and read and watch from there. And if at most you just hit the follow button, that helps me out as well. Because at the end of the day, all it is about just trying to gain some sort of traction. Doug, I don't know if you're still on or if you're driving home or what, but more than happy to have you on, brother. I will send the link your way. Feel free to hop on. Where are you at? There you are. And you can complain because I didn't come out Saturday. So you can yell at me publicly on stream, let people know that I'm a lame person and that I suck. Let's see. Don't know what that means. Team leader. You can buy the Lambo. Maybe I can buy the Lambo. You don't know that. We got the AK Media gang in here. Appreciate that. Hot Steve. Yes. Am I summoning the Milk Maiden? Yes, the Milk Maiden has arrived. Oscar is now selling off slightly. Still up 7.5% after hours, but it looks like somebody has taken a profit. We got Hot Irwin in here. RT1, Midwest, my amigo. Hopefully you're doing well, my friend. We got Duck. Miss Alex Watson started position Oscar last week, so please, you're covering them. It's kind of, I mean, people have been asking me to look at it for quite some time. So unfortunately, it took me a while. Keep adding to MSTY, PLTY, Oscar, AMD, and ABCL. Not the biggest fan, personally, of the Yield Max ETFs, personally, but it is what it is. So if I gave me PTSD, I sold another the same time. I think SoFi will be fine, man. I think it'll be fine. Here, Matt's getting in on the When Lambo movement, Rocket Lab. Heard it here first. What portfolio is this? Oh, I guess you're talking about the stock draft. So we did a stock draft last week between me and a few other YouTubers / article writers. And with that, I chose. I have to find the. Actually, Steve just sent it. Scoreboard. So yeah, let's see. All right, well, at least you guys can see this. Present, share screen. Cool. Let me just double check. Cool. So these are all the picks that everybody chose. You can see Amit chose Palantir. Sorry, my mouse is messed up. It doesn't, when I scroll in, it wants to scroll out. It's a huge pain in the ass. But Amit chose Palantir, Hood, Tesla, AMD, JP Morgan, Nebius, Grab, Apple, Visa, Duolingo, to which he is up 0.33%. And this is as of end today, I guess. So stocks that are trading after hours, I guess, because it's after today's closing price. So if it moves, then you are here. Dividends. Did Amit get a dividend? He didn't hold it to get the dividend. I'm going to have to eject with Steve here. Steven. How's he already getting dividends? It's bullshit. How's he already getting dividends? He hasn't held it through any X dividend dates. Or maybe the X dividend date was today? This is bullshit. First and foremost. So anyway, here's mine. Rocket Lab, Amazon, SoFi, ASTS, Berkshire Hathaway, B Share, Celsius, Oscar, EOG, Dutch Bros, and ABCL. You have Hot Chris, who's very much into UNH, Google, Marvel, Axon, Elf, Oracle, Cisco, Eli Lilly, Novo Nordisk, and Take-Two. You got BD Tanner, NVIDIA, Nubank, Now, Melly, Shop, Toronto Dominion, which isn't a bad one, ASML, AppLovin, Coinbase, Taiwan Semi. And you have BD Steve, the Milk Maiden, the man, the myth, the legend, the Dairy Destroyer. I like that one. The Dairy Destroyer. You got Meta, MicroStrategy, Microsoft, HIMS, Broadcom, CrowdStrike, Netflix, Salesforce, PayPal, and Micron. I don't know if you guys heard, but we had the chat vote. There was about 1,000 people watching, 500 to 1,000 people watching. They voted my portfolio the best. Just let's take a little victory lap, you know. Unfortunately, people still like Enphase. Don't know why. I've been a very vocal advocate that I dislike Enphase for several years. I'm sure their products are great. It's just the way that they were trading just didn't justify it. People were thinking it was going to be like $100 billion company. I just never saw it. Made good money with SoFi. I just couldn't understand why the analysts keep downgrading it. Hey man, things go peaks and troughs. Things go peaks and troughs. Yeah, Hot Steve gave me 500 gold on Kata. I still use it, and it helped me immensely. What was I going to say? With leveling my my whatchamacallits, leveling my professions. So Classic's a good time. Classic is a good time. Yes, if you guys haven't already, please take this opportunity one last time. Whoops, that's the StreamYard link. One last time. I thought I just had it. Here we go. Do me a favor. Read Steve's article. When FF14? I don't know what that means. People loving the article. People are very bullish on dairy. People want me to buy a Dodge Viper instead. I don't disagree. The V10 sounds very nice. Glad I could help you out with the two whitest dudes you've ever seen. There you go. We got Heinze in here. We did take a quick look at Lemonade. For those that are joining a little bit late, the discrepancy between what Oscar's foundational and fundamentals look like, much better than what Lemonade looks like. And I'd have to do a little bit more due diligence on it, but just from the surface level numbers, I would not put my money in Lemonade. Surface level numbers, I would potentially, in a quick bet, put my money on Oscar. That said, there's a reason why there's a premium on Lemonade and not on Oscar, and likely because Oscar is very dependent on the Affordable Care Act marketplace. So that's obviously a huge potential red flag during a Republican administration that hopefully foregoes updating the Affordable Care Act, like with Trump Care or something like that. You know, in this particular investment, you do not want disruptions along those lines. Let's see. I think we kind of walked over this one with respect to easy fundamentals. I do not own Grab. I wish everybody the best in it. You know, I'm not bearish on it or anything like that. I don't see the huge upside opportunity there. It's already, in my opinion, I think there's a lot of things that might need to go right for that to do well. But you know, I wish everyone the best. I know a lot of people are interested in it. So yes. So at the moment for fiscal year 25, they're forecasting like low 80s%. So right now, based off of actuals, they've kind of been tracking in the mid 70s. So if they're able to continue to persist in that manner, then it'll look good. Got some folks that are bullish. So let's see. A lot of people saying 72%. Well, not a lot of people, but Curtis here is saying 72% for payout was the golden rule for his insurance and risk management courses. 80% isn't sustainable based on the old school models. Below 75% will be solid, and 72% and below is a cash printer. There you go. Jumped back on RuneScape. Maybe I should try WoW. Hey, man. Yeah, Steve actually didn't need to go. He actually was just trying to catch up to me because he's jealous because I'm rating, and he is not. Thanos gang, my guy. I appreciate that. Taking Thursday to Friday off to be a degenerate. I love that. Once there's internal coins in Grand Theft Auto to make money, the video games can be streamed. There you go. Would love to see Matt play the game called Big Ambitions. That's what you guys have been watching on the channel for the past 7 to 8 years. Appreciate everybody that's been watching me be an idiot for the past 7 years. 8 years? I don't know. Interested to see what it takes Hot Steve, the Dairy Destroyer, to invest in a company like Oscar. Amit is your quant, so just ask him. Well, did the ACA policies change for Oscar? I don't think that they changed. Yeah, I don't think they changed. I think that this company just helps fast pace it a little bit. Hot Steve, man, the Dairy Destroyer. Need to look at Portillo, strong restaurant place similar to early Chipotle, right? I believe. Depends. I might sit a little bit on the couch and see. The thing that really needs to happen with some of these companies, specifically on the restaurant side, is they can't be franchises for really to make the big money. Because at that point, you're not capturing the large amount. I mean, yes, you are making higher rates of return, but you're reliant on other customers or other franchisees, and that might also have brand dilution as well. So I think the reason why Chipotle is so successful, the reason why Dutch Bros is successful so far, is because they are very strict company focus and company owned stores. The reason why McDonald's is successful as a franchise, keep in mind, like, why is McDonald's the company successful while Burger King and some of these others have struggled over years and been bought out, etc. So why is McDonald's? It's because McDonald's owns a lot of the real estate. So McDonald's, while they are in the franchise business, and there are company-owned stores, excuse me, there's a large amount of the real estate, and so that keeps their business very steady in terms of the net income that comes in through the business on an annual basis versus others. So really, why the franchise models, it's tough because you have to manage all your franchisees and they're all kind of independent contractors, and I don't know. It seems tough versus if you have the company owned stores. I feel like that's where the larger multiples can be. That's why I think, Dutch Bros can be a 30 or so billion-dollar company. Starbucks, on the other hand, has literally 20 times the amount of stores. 20 times the amount of stores, but yet it's like a $90 billion company, if that. So why is that? I think that Starbucks does a lot of like licensed operated stores, not real franchise owned stores. So you have to buy the product. So they're making money off the product, like the beans and this, that, and the other. But they're not necessarily making money entirely off the store. So they're not getting the whole profit margin. They're taking a portion of the profit margin. So I don't know. I just think that might leave upside opportunity for companies like to strictly focus. on growth. And I think if Portillo's is doing franchises, I think that might be another thing that you need to consider as well. It's like, are they franchising? Excuse me. Woke up at 5. So are they doing franchises? Or are they actually company-owned stores? When will the gaming streams happen? I don't know, man. I mean, I don't want to. I mean, I game a lot with my friends. So as much as Steve like wants me to stream, and while I think that could be fun, I like to stream with my friends, and I don't want them to feel like they have to filter themselves, or subject them to having to kind of like watch what they say. I want them to have fun. I want them to, so that's why I play it, is to. So I mean, if I had a full time, if streaming was my full time thing, like if I actually got unfortunately laid off or something like that, it might be different, because then I might find other people to stream with that know they're being streamed, etc. But me and my friends, we like to chit chat. We like to gossip like little schoolgirls. So if we're gossiping like little schoolgirls, nobody cares about some random person that we know. Or that or the other, right? I mean, I don't want to subject them to that. So as much as it would be awesome, it's like, none of my other friends stream, so it'd be tough, unless like a group of us started streaming, like if Doug and Amit and others started playing video games and streaming, but it just otherwise I'd have to wait or find other people to stream with, do it on this channel. Actually, I don't know what I would do, because if you blur the lines too much, then you actually start to lose algorithm space. Not to say that I'm like in an algorithm or anything like that by any means, but anyway. Come to the DR, not Mexico. Hey man, I mean, I'm a huge, like, this is the problem. It's like I always want to go and I want to bring people with me on vacation and everything. They were like, let's just do Cancun. And I'm like, dude, like, I get it. Like Cancun, it's easy. The infrastructure is there. So I want to get lost, like I've explored enough now where I'm just trying to like get lost for a couple days, like, a good week or so. And while Cancun is great, and I know I'm going to have a good time, it's like I would love nothing more than just get lost in Honduras or get lost in El Salvador or, some Aruba, someplace that's like a little bit off the path, Aruba's not even off the path, it's just, so anyway, I would love to do nothing more than that. But unfortunately, like when you're meeting up with people specifically from different countries and cities, everybody flies into Cancun. It's a little bit more tough to unfortunately go to other places. So anyway, DR is okay. I'd go back. I've been. Jamaica's great. I've been. I'd go back. It's just unfortunately for some reason people are always like, well, what about Cancun? I'm like, okay, sure, whatever. But next time, like if I want to go on a vacation and somebody's like, let's go on Cancun, I'll just be like, all right, man, you go to Cancun. I'm just not going to go, like this will be the third trip where I've like, not third trip. The first trip was great. Meeting up at Tevis last year in February. Awesome. And it seems like a complaining to go on vacation. Like I trust me, like I'm very fortunate, very excited to go. It's just at the same time, it's like I want to explore other places. Like I had this goal to hit 30 countries by the time I was 30. No, that's a lie. Was it 35 countries by the time I was 35? And I'm way behind on that. So when I came back from Trinidad, I was like in 9 or 10 countries. And I haven't explored a new country since like 2022, And so part of that's my fault, but part of it is also like, I took a hiatus in 2023 from going out and vacationing outside of the country. And so then when it came back to like 2024, I knew 2024 I would be doing a lot more business trips. And so the business trip piece was probably on me that I didn't get to explore, because I went business trips twice in 2024. And while I did get to go to a new country for that, I wanted to explore more of Europe. So unfortunately, that's my fault that I didn't plan better and do a little bit more investigating and doing some more side trips while I was there. Um, but then second, I went to Cancun twice in 2024. There's no reason to go to Cancun twice. While it's great, it's like, and I think the other part is like Cancun's a little cheaper flight wise than maybe some of the other things. That might be it as well. Anyway, I'll stop. Cash Flow Chronicles is split between me and Chris. Chris will be like, "Oh yeah, the stream. Like, I can't make it tonight," and I'll be like, "Nope. If I'm streaming, it's gonna be on Matt Money channel. Like, I get it. I've done that in the past. I've had other people that I've had streaming channels with in the past. Be like, oh, can't make it. Just go ahead. It's like, nope, 50-50. You're not there. We're not doing it. So, I'm not a fan of your politics, but I think you do a great job researching stocks and I pick good ones. Thanks, man. Much appreciated. I try not to make it a political channel, but inevitably, sometimes it happens. Let's see. Hands down, you got the best, but I don't know about the year. We'll see. Yeah, it's the whole year is difficult. I'll look into Oscar. VG was solid. Appreciate you bringing it to your attention. Well, it definitely made more sense for VG when it was down in the $6-7 range for sure. So it was kind of slightly above price when it was at $24. But the thing is $24 in 18 months time is going to see very, very cheap for VG. So it's like, it's one of those things where the company's continuing to grow. It's going to be able to throw a massive amounts of EBITDA, massive amounts of net income. It's going to be able to pay down a good amount of debt over time. So it's like, well, what do you do? Like, what is the right price? And so do you invest for what it is today? Or do you invest in what it's going to be 5-10 years from now? And so to me, it's like, well, when it IPO'd at a 45 billion, whatever market cap that it did IPO at, it was kind of like, all right, like you kind of have to just bite the bullet and be like, all right, I think it's going to be $100 billion plus company from here in the next several years. 2.5x is 2.5x. So let's see. House bill would turn law a Trump proposal to shorten the ACA open enrollment period. Start date would continue November 1st. I don't know about the U.S. policies. There you go. Some people like Enphase at this price. Good luck to you. It has maybe gotten cheap enough where the value actually play is actually in for it. I don't know. I don't see Enphase be. This is the reason why I was never bullish Enphase, right? So when I moved back from Trinidad, right? I was living overseas, came back to Trinidad. Came back from Trinidad and I was starting to research. One of the things I've always looked at potentially doing to my personal home, the house that I'm in right now, and several others, is setting up a solar system, battery capacitor sort of situation where basically, and some people may or may not know this, if you just install solar on your house and it's attached to the grid and the power goes out, you're fucked. Right? So even if you have solar, you're like, but I have solar. It's like, yeah, but you're connected to the grid. So in reality, what you have to do is in order to get cheeky with it and actually be able to be off the grid is you need to have some sort of capacitor that allows you to store energy while your energy is not getting renewed from the grid or your solar panels are still on. And so there's that. So you basically need to decouple yourself from the grid with some sort of battery. Now, that obviously requires you to go from DC to AC power, alternative current powers being basically what we use in our normal light fixtures, etc. With DC being the pieces that you're getting from solar, etc. So you need a transistor to be able to do that. Now, all the transistors that I was seeing on the market that were being advertised were not Enphase. They were all different components that were much cheaper or were in in collaboration with batteries or other materials. So to me, all the DIY stuff was was always not Enphase products. Now there were the Enphase products which were much more expensive, and you have to hire somebody to be able to get that. So to me, it's really not that difficult. Like especially if you're somewhat DIY friendly. Obviously, the end goal would be to hire like a local electrician or something like that under the table to be able to hook up your final stuff, but like get everything kind of built up prior to actually connecting it to the grid is actually not too difficult. Um, but none of those videos that I saw, research, etc., had people buying Enphase. It was always some other product, some other company that was never having deals. And so in that respect, it just never made sense to me why people thought Enphase was going to be starting to sell, get net income of $5-10 billion a year. I just never saw it. And so for me, it just never made sense. Now, they could still be at the place where they're making $1 billion, or that's what their kind of goal was, if I remember correctly, getting close to $1 billion in net income annually. And so maybe they're going to start to get to a place where they've hit a bottom short term, and maybe the stock price can go in the right direction again. I haven't done my research since it's literally declined from over 100. Where was it before? We're talking like mid 2023 when I was telling people I don't like the stock. I don't like the stock. We did a Cash Flow Chronicles about it as well. So yeah, I think it was coming down. So I know several people were very hyper bullish about it in the $200 to $300 range. It was coming down mid. So I mean, I didn't start really thinking or looking at it much in this 2022 time frame, but in this June to August timeframe, I was very vocal. And I remember being in Vegas. So this first drop started kind of really happening. And then this second drop really started happening when we were in Vegas, going from like the 120 range down to like the 70s. And I was just like, yeah, like I'm just not into it, you know? So maybe it turns around, I don't hope poorly for anybody, but even at a $6 billion market cap, it's a 42 price to earnings. Now maybe this is a one-time item or something like that, but I don't know. I just I don't know. I wish everybody the best. It's just not a fan for me. Let's see. MOP Classic. Can't wait to play it. There you go. We got June Moon in here. This young longtime Palantir holder picked up PTIR for side fun after watching your interview last year. It's up over 500%. Congratulations on that. PTIR is Granite Shares double X leveraged, I think. So we had the gentleman from Granite Shares come on the show. Need to reach out to him again, see how he's doing. It's been a minute. Current environment is not favorable for Enphase. Oh, Final Fantasy 14. Never played the Final Fantasy. Hi, Matt. I'm late. Didn't know you're really going live. As always, thank you. Much appreciated, Julie, for you always giving support. Sometimes this happens, man. I'm trying to go live a couple times per week. Really keep the stream alive, and with every time, it generally gets more and more. The viewership generally gets slightly better. Although people probably don't like what I'm talking about because we went from like 100 down to 130 or so. So, Spencer, please unblock me on WhatsApp. I don't know what I said to get you to block me, but here we are. Commander Shepard, what's going on, my guy? Thanks for stopping by. Steve is like a Dodge Viper. Smart. What do you think of eVTOLs? I hear mixed things, man. I hear mixed things with respect to eVTOLs. Some people think like helicopters are dead. I don't know what to believe. I really don't. People are saying SPY is dumping. If dumping means down 1/3%, then yes. We went from 603 or up 0.07 to down 0.3. So if that's dumping, then yes, we are dumping. I don't consider that dumping per se. I just consider that normal movements. There's nothing to see in terms of portfolio. It literally started today after. So it wasn't Friday. Some people think we started Friday. No, we started it today. All Texas Roadhouse needs to franchise is keep the dinner rolls and cinnamon game butter. I feel like they have a lot of company stores though, don't they? So they have 600. This is the benefit of Texas Roadhouse. 601 domestic locations. Only 56 of those locations are franchised. So I go back and say, if you're franchising, the majority of your stores need to be company owned. So Portillo not franchises all new builds with smaller layouts, etc. All company-owned, private equity that own, and then way public has been selling out. There you go. So I mean, Portillo's might be actually something I'm looking into. Then in that respect, do you see huge upside in ASTS after this run up? What do you mean huge upside? Do you mean like in the next month, 2 months, etc.? If I were buying ASTS, it would literally be personally for me, if I were to buy, I would need to see some revenue. And once I saw that revenue, I would really need to understand what the long-term revenue trajectory looks like. I hear people talking about how it's going to be a $1 trillion company and this, that, and the other. I wish the best for everybody. At this point, like I think it's very funny is that people think I'm trolling ASTS, and I am. But in reality, the reason why I'm trolling them is because I did actually ask genuine questions. And instead of answering them, they're like, you're an idiot, you're fat, completely irrelevant physical insults rather than actual, what's the word I'm looking for, defense of the company or providing information. And so they painted me as this villain, right? They paint me as this villain of like the ASTS community, like this guy's an idiot, he wants us to fail, blah 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 blah. And they're like, this one guy keeps copying and pasting. He swears to God he doesn't copy and paste, but he always is like, you call yourself a shepherd for investors, but yet you said you were going to gamble. It's like, yeah, I said I was going to gamble on the ASTS position because I never did the DD. So back in January, I said, oh, this thing falls back to $10. Yeah, I gladly would throw money at it because obviously there's some sort of hype around it. I don't know everything about it. So if people see me buying massively into ASTS, they're gonna be like, oh shit, Matt's done his due diligence. We have to follow suit because Matt, whenever he goes into a company, he doesn't do it blindly. So just like with SMCI, that I did in the first quarter earnings report in like April-ish timeframe, May timeframe, I stated this is something where I am not holding it for a long-term investment because I don't know much about it, nor do I want to. I just am investing for a simple thesis. I'm putting in money I can afford to lose, etc. Because I know people follow what I put my money into. Just like people are following today. When I stated that I buy Oscar, that I'm buying SoFi, people are following that and they're either making their own judgments or thinking, how do I feel about this? Am I going to act upon this? Is this, do I trust Matt's judgment with the DD? Do I trust Steve's judgment about the DD? So instead of not doing any DD on ASTS, I said it'd be a gamble to buy some calls. But yet these people, 6 months later, I'm going on like if the amount of mortgage payments that I'm getting off of these living in these people's heads were real, I'd be in the Maldives for the past 6 months. I mean, like I genuinely wanted to know certain things about the company. And just like everybody else, God forbid anybody else ask questions, but because Matt Money, the guy with however many followers on X and YouTube and whatever, asked the question, um, they decide to pin me to a cross. So what did Matt do? What did Matt do, everybody? Matt decided to play the villain in which they wanted me to be. They were portraying me out to be some sort of villain. So the people that have actually reached out and said, let's stop this, like Tut Capital and many others, the vocal ones that are actually like shrug it off, don't make me out to be some sort of villain. They're like, you know what, like so it is, whatever. I don't bother them. I don't. It's the people that are like, you're an idiot, you're fat, you don't know anything, you got lucky, you're making the best thing is now they're saying I make up my trades. How all I do is post my gains on my X. What else is there? But yeah, those are the two big ones these days. It's like I'm apparently now making up my trades. I never was going to invest in $10 for some reason, as if this person is in my head and knows exactly what I'm thinking. So anyway, I think it's just very funny. So maybe for those of you guys that are wondering, why is Matt being so I don't want to say rude is the right term, but why is Matt acting so differently towards these guys? Is because I'm just fulfilling the fantasy in which they want. You know, I don't LARP much, live action role play, but with these guys, I mean, they think that I'm some sort of Bond villain that wants everybody to lose money in ASTS. When I'm sure you've heard me talk with sharp words before about ASTS, about particular individuals in the community, not the whole community. Although it does taint the entire community. I hope that the ASTS community continues to point those people out and tells them to stop their shit. No offense. And in reality, I've only on probably 20 plus occasions at this point, verbally on podcasts, verbally on X or through text on X, have stated that I wish people well, including Chris Patel, who I let speak at length on Cashflow Chronicles about it, regardless of the fact that he wanted to talk garbage on Rocket Lab and how it's a bad investment without doing any due diligence. So hopefully that gives people some context about the ASTS piece. But in reality, I do think that there is an opportunity. The market is up there, but space is hard, man. Like, no offense. Anybody can really, just like Rocket Lab could fumble the whole Neutron thing. And it might put the company in a different trajectory. So in reality, ASTS is a very pivotal moment while they believe their upcoming satellites will have a step change performance difference. And I hope that they do for the investor's sake. I still think there's a decent runway. And unfortunately, it's still very dependent on launch. New Glen's obviously slower than expected to get to a higher launch cadence. The Falcon 9, while those might be successful, they could be delayed as well for other reasons. So fingers crossed that I think as of July, they're supposed to be setting up a rocket like every month or every other month with several satellites. And so hopefully they can start to get to a decent revenue. I think they're supposed to get to $75 million in revenue by the end of the year, which obviously they're not much revenue for the first few quarters of the year. So that'll be a huge step change for them. So fingers crossed with it, for the people that are in it. I personally, it might be something that I also, see or saw potential, which is why I even covered it in the first place. Something I could have saw potential in before I was completely turned off due to the people in the community. But because I thought it did have upside, what was it? A skewed upside risk to upside reward to risk ratio, meaning that yes, you could lose 100% of your investment, but you can go up multiple X, and that has been what has happened for a lot of these people that invested early, less than 18 months ago. And so I still think there's that opportunity for those folks. But what was I going to say? I already have several non-revenue companies like Next Decade, etc. And people also, there's another thing. They're like, Matt only put 5% in. Do you know what 5% of my portfolio is? Seriously, just do some quick math. Add a couple million together, and then take 5% of a couple million. I won't say how many million, but I'll just say a couple. Let's start with 1 million. 5% of 1 million is 50 grand. It's a lot of money to a lot of people. Start stacking up more millions, and then take 5% of that. So before you start chirping off like Matt's not putting a lot in, 5% of a million is a lot of money. 5% of a couple is a lot more. So, keep your head on straight. One thing I will say to end that kind of rant and soapbox is other people's perception is not your reality. And I think a lot of times people think that their perception is your reality, and that's just not the case. Your reality is your reality. So just keep that in mind. Keep your heads on straight, everybody. Plenty of places get lost here in the States if you're willing to venture. I agree 100%. I do need to venture a little bit more. I want to go to Nantucket. I was chatting with a lady friend, not the lady friend, a lady friend. I think we want to go Nantucket, or maybe it's Martha's Vineyard, or both. A lot of places I'm trying to see in the United States. Go to the Philippines, such underrated getaway. We have top rated beaches. 100%, man. 100%. I need to get to the Southeast Asia part of the world. Thanks for streaming. Heading out for the evening with the fam. Good luck. Miss Julie, as always, thank you so much for joining and your support. Trump warned everybody to evacuate Tehran 10 minutes ago. Jesus. We'll see what's on CNBC before I get off of here. Go to the Roadhouse when you're sick. I need to go to the Roadhouse. Sri Lanka is where it's at. I wouldn't mind. I've seen some Sri Lankan ladies. I like it. Be careful with those adventurous places. Honduras, El Salvador are dangerous. My girlfriend traveled to South America for 4 years, and she just said, please be careful. Yes, but El Salvador is a very completely different place these days comparatively to what it was. I'm not sure when the lady friend was there. Honduras, I know, is still not as secure. It can be quite sketchy, but El Salvador has drastically changed. They've locked up a lot of criminals and potentially some innocent people as well. So, Sri Lanka, chill vacation spot. Oh, yeah. Hell yeah. Please, English-speaking pyramids, second largest reef, jungles. Yes. What? I don't know what this means. Belize also doesn't extradite. That's a bonus if you're on the lam. I don't know what that means. I don't know if that means if I'm like trying to run away. I think I'm in good standing with the United States. I think. I don't know. Vitali got some leaks on Enphase. Good luck for him. Can you bring in Carlos and Vitali for Enphase? No. I mean, maybe if they're interested, but we had that debate 2 years ago. And in fact, I think I disliked I disliked Enphase so much that I think it's the reason why Vitali hated me and probably still does hate me. I like the guy. I like Vitali. I like his personality. I don't have anything against the guy. I just disagree with him on a couple of the stock picks that he had. I had so much hope for Tesla batteries, hoping it would get cheap, but I have a feeling they have stopped innovating in that space. I mean, I'm no Tesla hyperbole or anything like that, but I believe I believe that Tesla is doing an okay job of that. So Vitaly has leaps on Enphase via X apparently. Enphase is a good play. Yeah, it is. Maybe. Can we get your thesis on Bitcoin or have a show on Bitcoin? Sure. I mean, my Bitcoin thesis is pretty simple. I have movie star hair. Far from. I'm fucking 35 and 34 and balding, and I got dandruff all over my head. What was it to say? I need a haircut too before I go to Cancun. What was it to say? Bitcoin thesis: just follow the yellow brick road, follow the rainbow road. I think in several years' time, it'll be worth $1 million potentially. So my thought process is have it be a small portion of your portfolio, and to me, invest something in it monthly that you wouldn't mind if it disappeared. So what I do is I invest 3% of it monthly. So I take my income, I get paid 24 times a year by my employer, and so I just take whatever my gross income is divided, or sorry, my take home, and well, I guess my gross, and I said, okay, well, my gross is X. I take 3% of that divided by 24 because that's how many times I get paid, and every paycheck I put 3% of my gross income into it. So it ends up being a little bit more than my take home, 3% of my take home, but that's really it. And I just think that it's going to be something that people hold. I think that the reason why people don't necessarily think that Bitcoin is useful is they haven't lived in a country that struggles to get US dollars. So if you think about like Nigeria, Trinidad, several of these other countries that their main exports, or there's major companies that have control of the US dollar liquidity in the nation, it's very hard for them to do business outside of the US or import anything. And so I experienced this very heavily in Trinidad, where they would pay me a premium. So I would come home from the States. Unfortunately, or fortunately, depending on how you look at it, was only going back and forth to Trinidad for a little bit. And every time I went home, they said, can you bring me some money? And I would only bring a couple $100 or whatever, but they would pay me a premium. And so I'm like, holy shit. So in some respects, I was getting like free dinners and free lunches because I would come back, and generally speaking, if I remember correctly, one Trinidad dollar is 15% of a US dollar. So a $20 bill is like $3. So a $20 bill in Trinidad is like $3. So I would be getting, they would be giving me like 7.5 to 1. So 7.5. What's 1 divided by 7.5? And then that's what is. Anyway, I'm not good with the math, but they would be giving me a premium, right? So sometimes it'd be 7.5 or $8 to 1, So in that respect, you're getting like a 20-30% premium on the dollar that you're bringing back into the States. And a lot of the street vendors would only deal in cash, right? So, when I would get street food or something like that for dinner when I was leaving the office, I'd be paying in cash. So to me, I would only bring a couple $100, which would be a couple $1,000 Trinidad dollars. And so I would just use that, to pay for dinner. $10 worth of food ended up being like, I don't know, $60 or 60 TT or something like that. So in that respect, it's like, huh. So you start thinking, it's like, well, how can people get money easily in and out? Well, if you have an American bank account, you can send money through certain programs. So you can buy and sell Bitcoin. So you can turn your Trinidad dollars into Bitcoin and get US dollars. Because in order to get US dollars, you need to have some sort of way to import US dollars into the country. Well, you have these 4 big companies that pretty much were like the lead, uh, companies within the country that would be dealing in U.S. dollars, so they would get the priority over anybody else, right? Why prioritize a simple family of two or three if you could, favor three or four major corporations? So at most, people would be able to get like $100, $200 at a time, by the bank, and sometimes they wouldn't have anything at all. And so, in that respect, I would, it makes sense when you're trying to import things. Like Trinidad doesn't have everything. It's a country of 1.5 million, 2 million people. And so to import something from Amazon, you would need to potentially buy it using US dollars from a US bank account. Well, if you don't have a US bank account, you're effed. Versus if you have Bitcoin, you could buy Trinidad dollars to Bitcoin, Bitcoin to US dollars, or just use Bitcoin to buy it, whatever, and or pay Bitcoin to somebody who could then transfer it to dollars, etc. At some sort of, and so that's pretty much it. Um, that's really the thesis. You need to have some sort of currency that's backed by the trust in other people. And so you have a lot of people in Europe, sorry, not Europe, Africa, using Bitcoin. A lot of people in the United States, many other countries, Bitcoin is a way to be able to get money to and from without having to get the government involved per se. And so I think that that's honestly it. And uh, yeah, I think that's pretty much the easy thesis. So I mean, I think in 6 months to 8 months, we'll have a peak. We'll be coming down in about a year's time. I trust you because you tell us to do your own DD. There you go. Let's see. Any view on SRPT? I don't know what that is, but good luck to you on that. Look into QXO. That's one that Ken likes a lot. This QXO. We had him on the channel not too long ago talking about it. There always be some folks believing you're a Bond villain. You're awesome what you do. Pride. Appreciate that, my friend. Appreciate that. I'm okay with people. This is the thing, is like I'm okay with people if they're like, Matt, you're an idiot, like because XYZ, right? Or this is why I think you're wrong, bring up points. But to immediately start to go to like physical, like demeaning, just means that one, you're low IQ, and two, that you don't actually have a point. You're just upset because I don't believe in the same thing that you believe, or I'm not thinking the way that you think. Well, it's not very, to me, I'm a very proud individual. And so, call me what you want, but to call me a liar, say that I make up trades and stuff of the like, I mean, come on now. Like, and then to be like, oh, when did I do that? And immediately it's just like, you call yourself a shepherd, you shouldn't be gambling, bro. And it's like, dude, like, you know what I mean? Like, copy and paste your old posts, like whatever you're doing, sure, whatever you want. But like to immediately call me a liar that I make up trades, like, come on, you're better than that. Anything thoughts on cooler space batteries? I thought that, no offense, I read somewhere, whether or not this is true, that they got rid of the space battery thing and they're full on into the Bitcoin thing now. So, no offense, wish you the best in it. Don't wish anybody poorly, but I would just double check that they aren't really trying to switch their business model to attract investors. Learned a lot about Rack Lab. You put it on our radar, $4 range. Magic got in at 7. Appreciate your insights. Hey man, you're the one that hit the buy button, so can you. And obviously, you did some research on that. So congratulations, and you're holding it long term, your largest position. That's also awesome. I would just always just double check, man. Like as long as you still feel convicted, right? As always, with anybody buying into a company, have an idea as to, I don't like to look at it this way. If you find the right companies, in my opinion, Rocket Lab is one of those right companies. You don't have to sell. I mean, for me, it's about acquiring assets. I don't like to trade. Sometimes I feel the need to if something gets way out of hand. But to me, I try to buy things that I can hold for the long term. I'm thinking Dutch Bros, Palantir, Rocket Lab, SP 500, Google, Amazon, the companies that are in the top 5. Next Decade, Venture Global, companies you plan on holding for a good amount of time. Now, obviously, if the underlying fundamentals of the company change, it hits its terminal value, whatever, then yes, you could sell, move on, etc. But uh, it also depends on how large of a position it is for your portfolio. Rocket Lab's almost grown to too large in my portfolio. I don't want to trim, but at the same time, I'm like, if it gets twice the size of it is today, I mean, I wouldn't want to trim, but I feel like I might be obligated just based off of risk tolerance in my portfolio. Um, but we won't talk about that. I mean, it's grown massively. So fortunate for me. Where are you in oil and gas? I don't know if this is a where or where. So, let's see. I started at $0, my guy, 10 years ago. And that's the thing, is like a lot of it, like a lot of people are like, must be nice. It's like, dude, I started at 0 just like everybody else. Like, I don't know, just because I've gotten to where I am doesn't mean like there's a lot of late nights where just working at the office just to make sure that I keep my job. Just investing on a monthly basis. It's not like I'm not an oracle. That granted, yes, Palantir, Rocket Lab have done well for me. Some of the other companies have done well for me, but it's like, even if let's just do this exercise. I think a lot of people neglect this. They're like, oh, bro, I'm going to put so much money into this. And they're like, I'm taking a big risk. So is that showing up? Okay. Even if you put $1,000 into something and it goes up 10x, you turned $1,000 into $10,000, right? This is what I'm saying. You know what I mean? But imagine now you started with $1,000 this month, and for the next 5 months you put in $200, and now something 10x's. Now you're at 20 grand. So I mean, all I'm trying to encourage people to do is just invest money monthly. Invest monthly, right? Like, try your best. Yes, if you have $5,000, you're able to throw it in, absolutely. But always be trying to throw in whatever you can. Live below your means, and eventually you'll be able to live above where you ever were, right? And that's kind of where I'm at. It's like, I could take my foot off the gas if I wanted to. And in fact, I probably should get a little bit better work-life balance, lose a little bit of weight, get healthier, etc. I should do those things, for sure. But that's what I encourage people to do. I started at 0 10 years ago. I did the only advantage that I had, which is a huge advantage, and it's a big shout out to my mom and dad, was that I came out of college relatively debt free because they paid for my education. So every dollar that I've earned since I turned 22 and I started in the workforce was fortunate enough to go directly into investing. Been paying my own cell phone bill, been living on my own, etc. But luckily for me, I started at 22 with kind of a clean slate. And in that respect, I guess I was given a very fortunate gift. And so in that respect, like, been able to at least turn that around and build on that very successfully over the past 10 years or so. Get lost in Ireland with a few creamy Guinness at the end of the day. That sounds pretty decent. Got the Tetons. Oh, Bitcoin or Bitcoin proxy. I mean, it depends. I mean, I for people that aren't tech savvy, you know, this is the problem. Is like if you buy actual Bitcoin, my fear is that if you're not tech savvy, you don't know what you're doing, you could lose it, right? And so I think it's okay to buy an ETF. I think nowadays it's okay to buy an ETF. Um, yeah. Uh, both AMPX, 21K shares in Rocket Lab. Congrats, man. That's awesome. That is awesome. Do you use travel credit cards like Amex Platinum? I do. Um, although a recent credit card, several credit cards actually came out that um, give you cash back in Bitcoin, and I might actually do that instead. Getting the stink eye crab in your phone. I appreciate you getting in trouble for me, Julie. Hopefully you have a great night. Yeah, man, I don't think people realize it. I think we get super accustomed to the fact that the US dollar is super liquid internally in the country, and externally it's a huge problem to move money around the world. What's going on, Fabio? Hope things are going well. Let's see. Um, thank you. Do I think the big eight are gonna? We'll see, man. I mean, the way I looked at it was kind of two things. Two things. The strategy. I wanted to have the highest potential for alpha, and then two, I wanted to make sure that if two companies, mainly SoFi and ASTS, were to get into somebody's hands, that I couldn't come back and next year been like, damn, these are the reasons why these guys beat me. Is because SoFi or ASTS. So that was kind of the reason why I wanted to get those two. But I do honestly think that some of those companies will do well, but some of them have the chance to really be pulled back or sit stagnant. Like some of them have been stagnant for some time, and none of them are guaranteed to be winners. And some of them have run. Like Bros has run a good bit, and I think Bros at where it is today is overvalued, where it could be in 5 years' time undervalued. But it depends on what it's valued at in a year from now, and that's a gamble. I could see a place where Dutch Bros gets back into the high 50s, low 60s within the next year. And that would be relatively cheap. Would it be dirt cheap? No. Compared to what the company is at today in terms of what they're doing. So, anyway. If you were a bond villain, what would your goal be and where would your base be? Definitely a secret island somewhere. What would my goal be? I don't know. I don't know. I don't believe in trimming. Believe it kills gains. That's the thing. I think a lot of people think in very poor mindset. They think, "Oh, I'm gonna have to trade or sell." It's like you don't have to trade. You find the right companies. Like, and I use this example a lot. Is like, when was the right time to sell Microsoft? When was the right time to sell Amazon? When was the right time to sell Google? These have been phenomenal companies over the past 15 to 20 years. At what time do you say, "Oh, they're done"? Right? And the answer is likely never. And so, if something gets way out of whack, um, then you kind of have to use your judgment. But I see people selling out of Rocket Lab, and some people are sitting there saying they see Rocket Lab being a couple $100 billion company, and then they're selling. It's like that's the most ass backwards thing I've ever seen. It's like you're hyping up how it can be the next 10x company and then you're selling because you're waiting for a better price. It's like, okay, you're chasing pennies to make dollars in that respect because, okay, maybe you're able to get an additional 5% share count or 10% share count, but you're already in the stock. And so, unless you're trading in a Roth or something like that, you're going to pay more in tax obligations than you are going to be able to get in terms of increased share count. So I think a lot of times people just try to be way smarter than they really are. Live update. Donald Trump is cutting his visit short to the G7 summit in Canada to go back to Washington, D.C. due to the Middle East conflict. Man, I really don't know what to think about this whole Middle East thing. I just want people to stop fighting, but I mean, that's not for me to say. I mean, it's been going on for millennia. Will us retailers disappear as the new AI trading software becomes too advanced for us to compete with them? I think that's far away. I think there's, no matter what, there's always going to be pockets of opportunity in the markets because people are always buying and selling out. And it takes a while to move in and out when you have big companies trying to sell hundreds of millions of dollars worth of shares. I mean, that if they sell it all at once, it's going to take a huge impact on the stock. And so in order for that to get rebalanced, you're going to need to form a new base. Somebody's going to have to pick that up. And, you know, I just think there's always going to be an opportunity somewhere, regardless of whether or not you think that's like a stupid Jim Cramer quote. I'm 34, but yes. Am I still holding TQQ long term? No, I sold it in the 80s. It's been rather flat over the past year, but I have been selling cash secured puts on it in the 50-ish range, $50, $60 range, that have been making good money on that. Hey, Matt, what are you buying your week? I actually just stopped DCAing into... Was it Venture Global? I'll have to double check what I stopped DCAing into. Because I just switched it to, and I think the Venture Global one went to Oscar. And then I don't know if I did an incremental one for SoFi or if the SoFi one took the place of Rocket Lab or Next Decade. I'll have to double check. I feel like Next Decade isn't done building yet, but I felt like for now, my Rocket Lab, as much as I love it, I think I'll wait a little bit until some sort of decisive movement happens. Thanks for the tip on VG. Hey, man, I mean, there's still a lot of people that did not listen, unfortunately, when I said, hey, don't go all in on the IPO. Do a 25% position because you don't know what's going to happen. And I know some folks that did a 25% position and then used the other money for other things and unfortunately never averaged down. So there are unfortunately some folks out there that are still negative on the VG position, and I hold my heart out to them, but it just goes to show you, like, I can come out positive sometimes on certain things because I have the long-term time horizon versus others. You know, you can't. This is why you cannot always just say, all right, I'm going to buy when somebody buys. Think about the long term, about what it is. Like, is it a trade? Is it a long term hold? Is it what? Because to me, as the stock went down, it made it more sense to buy it. Because I knew the economics. I knew it was a profitable company. It's not like it's a pre-revenue company, right? These guys actually have, at the time, a first facility that was doing really well, and a second facility is about to come online, and a third facility that was about to be sanctioned. So in that respect, relatively easy to quantify is it cheap? Is it expensive? And then you have analog data from other facilities as well. So to me, it goes back, like, you have to understand the full thesis when you get involved in some of these people. Like, some people are like, ooh, Matt's making a really good conviction case about Oscar. It's like, well, Oscar could come out next week and be back down to 10, $11, and you could sell. To me, I'm saying, sitting here, the Affordable Care Act marketplace is something that is a risk at the moment. It could see a 50% drop overnight. In the matter of weeks, it could see a 50% drop from where it is today. And I'm okay with that, knowing that there's an upside opportunity over the next 2 to 3 years, if nothing with the AC marketplace is done. So I'm saying that bluntly and out loud. Whether or not you choose to listen, and whether or not you're okay with losing that 50 to 100% of your value in stock right now, is something that you have to be comfortable with. So some food for thought there. But that was 10% of my portfolio, which is ballooned to about 50% of the portfolio. Do you think that is irresponsible to keep or let the winner win? I think that really is dependent on you, man. I can't make that decision for you. Yeah, I think you really just need to think about what company it is, what other, let's just say, for example, this is a beautiful example, is like, you have $1,000, and I'm not saying this is you, I'm just saying, hypothetically for others. It's like, you have a $10,000 position, and you had $1,000 position in, say, Rocket Lab, and now that Rocket Lab position is $5,000, so your whole portfolio is now 15 grand. It's like, well, how do I say this? The portfolio is still rather small. My position on that would be, keep adding money to the portfolio. Don't worry about it if you think Rocket Lab still has a lot of room to go. But it really just depends on the position. Now, if you have a couple million, now say you have a $10 million portfolio, you have $1 million position at Rocket Lab, that is now $5 million. Completely different situation, especially depending on where you're at, right? So it really just depends on you. And that's part of the reason why my follower count is lower than everybody else's, because I make you make your own decisions. Most people will just be like, oh yeah, bro, diversify, blah, blah, blah. It's like, if I had conviction in certain stocks, like I do, I guess 50% of my portfolio is in 2 stocks right now. A little bit less than 40% of my portfolio is in 2 stocks right now. Does it concern you that 47% of trading volume was penny stocks as of June 12th, highest ever? Do you hedge when things start to feel a little frothy? I don't hedge. Like, I don't buy puts or anything like that, but I do try to get a little bit of more cash, but I'm not wholesaling things. I don't sell things off at the peaks. Yeah, I mean, that triggers taxes, and just, I'm just one of those people that's more of just like a continue to buy every month kind of guy. I'm not smart. I try to tell people I'm the stupidest person in the room. I just try to buy. I'm not trying to overcomplicate things. I don't know when things are going to top out. So in that respect, I try to just continue to buy stock. In terms of the penny stock thing, I don't know. Yeah, I don't have an answer for that. I'm not smart enough to answer that. Miss Lisa, what's going on? Miss Adams, thank you for joining. As always, the support. Katie, what's going on, my guy? With regards to Rocket Lab, or any stock conviction doesn't clearly beat what the price target is. Paper handing, diamond hands make champs. Yes and no. Yeah, exactly. Nobody crystal ball really knows. I mean, I have a strong feeling that Neutron might be a sell the news event. So I feel like there's going to be a lot of hype around Neutron and doing well. And then I think when people realize that it's going to take time for that revenue to actually show up, I think it might be a sell the news event. But I could be wrong, right? It might not be. But going back, it's like, say you had another Microsoft in your midst, right? With respect to this, it's like, when is the right time to sell Microsoft? Are they still growing? Are they still doing really well? Um, if you think that this is the other thing though, is like, let's just say it is Rocket Lab, and you're sitting there like, okay, well, the easy 6-7x has been made, right? You went from $4, now you're at $25-$30. The easy, 6 to 7x has been made. Now you could say, all right, well, I have this other opportunity that I'm willing to lose, let's say X amount of money on. Well, if you have conviction, say you have another Rocket Lab in your portfolio that you're sitting on, and you're like, I think this thing is going to go up 8x, right? And you feel comfortable losing 20% of your portfolio because you think it's going to go up 8x, then sure, trim 10%, take that 50% down to 40% and add it to whatever you see is plausible, that you think is gonna end up, in the right direction. Um, that's up to you though. I can't make that decision for you. What I will say is though, is I think a lot of people, sure, restart the video and rewatch from the beginning. We talked a lot about Oscar. What does it say? I think a lot of people try to diversify. Diversification is okay to an extent. But you have to realize is like a lot of people are like, I'm going to start dividend investing. It's like, that's great. You have 10 grand, you're getting 2% yield. Like you're getting $20 a year, like $200 a year. It's like, come on, man. Like to me, what's more important is to get your money up, you know? That's more important. Worry about dividend investing when you have, I know it's easier said than done, but um, hopefully people take that to heart. Like I hear people like, hey, I'm focusing on maximizing my dividends from my $20,000 portfolio. It's like, maybe, like, I don't know where your position's at. Like maybe that $400 a year is really helpful for you. Like I don't want to downplay that. Like $400 can be a lot of money for people per annum. Um, but for most people, especially in your prime earning years, if you're able to be contributing more so to your portfolio in the long term, I would say that 20 grand is better to be placed in something like an S&P 500. The problem is a lot of times when people get involved in dividend investing, believe it or not, they end up being super greedy with respect to the dividends, and they invest in companies that have high yields. And generally speaking, those companies have high yields for one of two reasons. The company is obviously losing is becoming extremely mature, so they're raising the dividend because they're paying out 80 to 90% of their total income per annum. Or two, the payout ratio is high because the stock prices drop massively because it's a shit company. Prime example is like Walgreens, for example. A lot of people were like, "Ooh, Walgreens, the yield keeps going up, so I'm gonna keep buying." Well, look what ended up happening to you, my guy. And I tried telling this to several people, and they refuse to listen. They refuse to kind of keep their ears open. It's like, I get it. There is a time and place for dividend investing. I love dividends myself. Venture Global is a dividend company. Google's a dividend company. But at the same time, I'm not going to be sitting there chasing the MSTYs of the world, because I think that there's a diminishing return sometimes when there's a balance, in my opinion. I would much rather sleep well at night having a portfolio that yields 2.5% that gets me whatever income that I need, and spending another couple of years working to get to that point, knowing that I'm not going to lose sleep, than if a recession hits and my portfolio is yielding 6 or 7%, and next thing you know, the dividends get chopped in half because of the current environment that we're in. So I think a lot of times people cheat. They're like, "Ooh, but if I have a 7% portfolio, then I'll be able to retire with 1/3 the amount of money than if I retire with a 2.25% yielding portfolio." And it's like, well, you're probably only going to hurt yourself in that respect. Yeah, the yield trap is real. I mean, a lot of times as well, a lot of people like my sister, I'll call her out just because I've had this conversation many times. Like the emotion of seeing a stock down in your portfolio might be like, oh, I sold it. I rushed to sell it because I just couldn't stand seeing the negative number. She didn't do this. This is not the scenario. But I told her straight up, I'm like, just on a monthly basis, add to the S&P 500. Don't think about it, because then she'll just be like, well, what stock do I buy? Well, now I have cash because I didn't know what stock I wanted to buy. There was like 2 or 3 different stocks I wanted to buy, and so I didn't end up buying any of them. And next thing you know, the market goes up 5% that month. We just missed out on 5%. Like I don't know. So a lot of times I just tell people, especially if they don't have the time, just invest in the S&P 500. I mean, chase yield might not be the right. Because sometimes when you chase yield, they cut the dividend. Next thing you know, the stock price falls to shit. So just be careful. Congratulations on Rocket Lab, my friend. You don't have to sell. Growth stocks eventually do eventually become dividend stocks over time. Google's a prime example of this. Apple's a prime example of this. And so you might say, like, Apple pays a measly dividend. Well, it doesn't pay a measly dividend if you've been holding it for a while. You have to think it's 6x'd over the past 15 years. But since it started paying a dividend, that dividend has grown massively over the past same time period. So while it might only be like 0.5%, in reality, based off of where you were, 15 years ago when you potentially started buying, your yield on cost on Apple could be 6 or 7%. So at one point, Philip Morris was a growth company. At one point, General Motors was a growth company. At one point, Microsoft was a growth company. People thought it was maturing, and then they got into the cloud business, and they were paying a decent dividend. I think it was like 3% at one point. Now it's not 3%. But imagine you were buying. I mean, I've talked about this many times. 2015, I had, I don't know, 50 or so shares of Microsoft. It wasn't a lot of money back then. It was like $2,500. But it was a lot of money to be back then, but not a lot of money to me now. But I mean, that was considered a dividend stock, Apple, a dividend stock now. Google's a dividend stock now. Meta will be a dividend stock here soon enough. Amazon will be a dividend stock here soon enough. So just because, like, this is the thing, is I think when people think dividend stocks, they immediately jump to it has to yield 4 or 5%. And I just don't think that's the case. You need to look for companies that are still maturing, that are figuring out good ways to distribute capital to the world, but are not over leveraging this. They're still reinvesting in the business. They're still innovating. They're still growing the top line revenue. That's important, right? Don't invest in companies that are basically in cash harvest mode, or like, yeah. So anyway, I wish everybody well. I don't know what's going on with all these tweets and stuff that I'm getting with respect to Trump being back in DC and taking cover in the command center, etc. I just wish everybody well. I hope everybody well. And as always, thankful for the 160 of you guys that have stuck around. I know I'm not nearly as entertaining or on as frequently as Amit, but it definitely means a lot to me when you guys show up. So please, if you haven't already, hit the subscribe button. Be sure, if you haven't already, to hit the bell notification. It means a lot. It'll tell you whenever I'm live. If you got any value out of this, please do that. I try to go live at least once a week, ad hoc. And I also will go live, generally speaking, on Friday nights to do Palantir Weekly. And then I do Rocket Lab Weekly more frequently lately. And that's on Saturdays, so you guys can catch that. And then, as always, if you guys haven't already, please subscribe to the Cash Flow Chronicles channel. That's where Chris Patel and I do our stream together. We try to do that once a week, if not twice. We are currently in our best month to date, so would appreciate you guys going over there as well and hitting the subscribe button. We're about to hit 3,000 followers on there, so would mean a lot to us if we did get to that. And we, generally speaking, average about 200, 250 people now that come watch the streams, and then the full is like 180, 190 if you were to kind of include the entire average. So it means a lot. You guys have been really big troopers when it comes to watching that and catching up with that. It's probably for Chris, not for me, but I'll take a little bit of the credit. I'll take 1/10 of the credit. Chris can take the 90%. A lot of people are on there for him, but I appreciate you guys and really hope, as always, that you learned something from these streams and you've made a little bit of money. And I think at the most, I'm not here to try to call things out. I'm here to help try to, climb a learning curve. And, I wish I had somebody to talk about these things with me 10 years ago when I first kind of got it started back in the 2012, 2013 timeframe. And it really would have cut my learning curve a tremendous bit. And I probably would have, slapped myself in the face. And sometimes it is due to the fact that you actually invest your own money. And, because I did have people be like, invest in the S&P, don't invest in dividend focused stocks and blah, 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 blah. But anyway, hopefully you guys can get some sort of value out of it and win big over time and continue to add at all costs every single month. So if you guys have any questions, any stocks or whatever, do DM me on X, tag me, DM me, whatever you want. I'll try to get to all of them. I don't have a lot of stocks in the portfolio. I also don't look at too many stocks as well. I not to say that I don't look at any stock, but there's a lot of stocks that I think a lot of people look at that are absolute dog shit, just to be point blank. And you really have to think, like, why are you investing in a particular sector, right? And for what reason? Do you think there's growth there? Do you think there's dividends? Really think about it. Like, think of the end in mind. What is your goal investing in some of these things, right? Are you just looking for 10x? Like, are you looking for 10x's? Are you looking for 10%? Like, what are you looking for? What time horizon, right? Going back to those 5 key things we always talk about: objective, time horizon, risk tolerance, how much money you're going to be adding, and how active or passive you want to be, really will help you determine how to structure that portfolio. And it can change with time. Just because it starts one way doesn't mean it can't get to the other. But I honestly am curious why some people look at some of these dog shit stocks, bottom of the basket. It probably isn't going anywhere. But for some reason, they think that there's some sort of massive money to be had. I would just question, what do you think when you're buying the stock? What do you honestly think is going to happen? And kind of start there. Like, what are you expecting, a 10x or something like that? And I see some people investing in AT&T, and it's like, yeah, man, I'm going to be a quadrillionaire. It's like, really? So I did actually in the past look at Enduro. It's taken a little bit longer to get to revenue and profit than kind of expected. I have a buddy, an independent investor, who looks after them and does a little bit more in-depth research with respect to the people in the channel, on his channel rather. So he's probably better placed than I am. They've uplisted a couple times at this point. But yeah, he's probably much better to talk about it. I've kind of got out of that stock game to an extent. I'm not saying I don't invest in penny stocks. It's just it's not a penny stock anymore per se, but to some extent, you really have to be careful with some of these pre-revenue, pre-profit companies. And so, Lemonade is a prime example. People were chirping up about Lemonade earlier, and to me, it just kind of looks like a dog. I don't understand why people are so fired up. Revenue growth doesn't seem spectacular, and a bunch of other stuff. But anyway, 2-hour live stream. Appreciate you guys, and I will talk to you guys soon. Good luck. Cheers.